Talk about some of these retail movers today. Brick and mortar ain't over. Best Buy and Dick's Sporting Goods both reporting big third quarter earnings beats and a surge in same-store sales as demand for electronics and athletic wear continues to climb. Best Buy's comps are up 23% year on year. Dick's just over 23%, which is a company record. Both retailers declined to give forward guidance, and they're getting hammered in the market today. Best Buy down 6%, Dick's down 3%, Bertha. But, I mean, you know, obviously we know digital helps those overall comps, but they specifically gave the in-store figures, and they were very strong.
Well, you know, for Dick's, 90% of sales were driven by store. Now, that includes pickup in store and curbside. And that combination, they think, is going to be here to stay. For a lot of people, it's a matter of convenience. When it comes to Best Buy, you know, people may have pulled forward in terms of buying computers and phones and things like that. They may have already bought a television set or may still be thinking about it. The body language not as good on the call, if you will, from Best Buy. But they were fairly optimistic on Dick's Sporting Goods. They said, although the warm weather has made sales of cold weather gear a little slower, if it continues to be warm, that'll be made up by golf. So people might still be golfing in December if it's still warm. And if we get cold, then they'll buy the cold weather gear. And they still think golf, either way, is going to help them out a lot. They think that'll be a big gift this year. I know
now,
Dawn
before I tee that one up for Dom, Bertha, but I actually want to follow up with you first. So, again, with the Best Buy shares down 6%, you mentioned their tone was a little bit different on the call. What did they say on the call? I mean, because if they're more cautious going forward, that would kind of echo the consumer confidence numbers we saw today, the GDP forecast from J.P. Morgan for the first quarter. What did they say that has spooked everybody?
They were just not as confident about the fourth quarter. They sort of said they didn't think they're going to see 70% in the third quarter. They said they're not really seeing that yet for the holiday quarter. Again, Dick's was much more upbeat. They sort of said we're seeing strength coming into the quarter and even going into 2021 when, you know, Lauren Hobart will be taking over as CEO. She's the president, and she talked about how the omni-channel is really working and helping to bring down their costs. Whereas Best Buy sort of said there were some supply chain costs that were also eating into margins. It was just a little less interesting, kind of hopeful.
Dom, just put a quick pin in it for us, because this in some ways is the whole market, you know, encapsulated in a stock right now. You know, are they already suffering a COVID hangover? Is it supply chain issues? You know, that kind of thing.
Huge beneficiary of the COVID pandemic. I would say that they kind of capitalize on a number of fronts. It's not just the outdoor sports. It's also things like patio furniture, apparel, all sorts of things. So if you watch them, they could be a bellwether for consumer spending during this COVID-19 holiday season, Kel.
Yeah, that's Dick's and then Best Buy, too. Again, both under pressure in the market. All right, let's move along, talk some Tesla, because it's just so remarkable. Elon Musk is now the second richest man in the world, according to Bloomberg's billionaire index. He leapfrogged Bill Gates yesterday after adding more than $7 billion to his net worth just in that stock session. He can thank the Tesla shares, which are on a tear this year, including a 34% gain just since it was announced they'll officially join the S&P next month. Musk's net worth has risen by more than $100 billion this year, the biggest increase of anyone on the index. Robert, listen, it was such a gamble for him to get compensated this way, and it has paid off so unbelievably well for him.
Yeah, you know, so he's added $3 billion just today. I have been covering wealth for 17 years. I have never seen anything like the rise that we've seen with Elon Musk in the past 11 months. $100 billion just in 2020 works out to something like $17 million an hour for all of 2020. And we remember it took Jeff Bezos 20 years to become worth $100 billion. And Musk has done it in just 11 months. I mean, it's just incredible, and it sets up this new race. Remember, for over a decade, the race in wealth was between Bill Gates and Warren Buffett. Now, it could be between Jeff Bezos and Elon Musk. And look, you know, Tesla would have to reach over $900 per share for Elon Musk to even get close to Jeff Bezos. But by then, Bezos will probably be the first trillionaire. Who knows? But these two Bezos adding $67 billion to his wealth this year, combined $167 billion between the two of them. We've never seen anything like the scale or the speed of this kind of wealth creation.
Yeah, and Dom, I know I keep saying this over and over again, but I just wonder what happens on the other side of this. Bertha, just hang on one sec, because, you know, after you have this kind of wealth amassed so quickly, it's not the personal wealth that's interesting to me. It's the size of this company in the market, Mr. Chu. It's over $500 billion today, Tesla is. You know, if it easy come, easy go is my concern.
It could be, but there's a long way it has to go down before it matches up to some of the biggest car titans out there, right? You look at the market cap of Toyota and Volkswagen and General Motors and Ford and all those big guys. I mean, Tesla's lapping these guys all around. The big concern is, like you said, if there's a pullback. But I would also say this, to Robert Frank's point, Tesla versus Amazon. I mean, yes, one is much bigger than the other, but the two richest men in the world both have space projects. Stock gains like this can certainly help fund a lot of those space initiatives. So something I'd be watching for the next few months and years, possibly at this stage.
It's true. Shifting the whole burden of space from the taxpayer onto these companies. Yes, philanthropy in a very, very big way. Absolutely.
Elon Musk did sign the giving pledge back in 2012. If he continues at this rate, he's going to have a whole lot more to give away if he gives away half his fortune.
Yeah, that's true. But like I said, if I were him, I'd maybe just wait a year, make sure, you know, if we've got what you've got.
Shepard Smith here. Thanks for watching CNBC on YouTube.